Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. So traders, trading is all about probability, right? Trading is all about having some sort of probability on your hands. Now, firstly, if you are trading a trading system, or if you're trading the market with no probability, meaning you're just getting in when you think it's a good idea, well, I think it's going to be a good time to get short the market, or it's going to go long the market, or I think it's going to be a good time to buy the market or short the market, or, you know, Ray Dalio said this, or this guy said this, and that, so this, did that, blah, 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 right? Trading is all about probability, and there is no probability at all. If you go to buy Nasdaq, right, today, if you go buy Apple today based on, well, it's going up, so it's probably going to keep going up, so that's what it's likely to keep doing. Wrong, 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 wrong. There's no probability in that there, right? Probability, remember, a probability is not based on one trade, right? How does a probability show up? It shows up in a basket of trade. That's the reason why it's called a win-loss ratio. And if you're not even following a system that has a win-loss ratio, you don't even have a probability. You're gambling, right? You are not the casino. Successful traders like myself and other successful traders, what do? We have a plan, gives us the probability. So that means if I take 10 of the same trade, I know for myself, 9 times out of 10, I'm going to make a very nice profit. And maybe 1 or 2 times out of 10 to 20% of the time, that's my system anyway, I'm going to make a loss. So in this video, I'm going to help you help you with one trading technique that helps me when I'm trading the markets and have to give me the odds on my side of doing really, really well. Now, what am I talking about here? I am talking about using one simple moving average. Now, let's actually take this off the screen here. I'm looking at a blank chart here right now. I'm looking at actually the GDX right now, but it doesn't matter what it is. Let's actually go to this chart here. And all I'm going to put on here is a 52-day moving average. Now, why am I looking at a 52-day moving average? John, is it simple? Is it exponential? Who cares, right? I use a simple moving average. It doesn't really matter whether it's a simple or it's an exponential. You know, those don't matter, right? What do I use this for? Well, there's a few things that I use this for. But one of the main things I want to share with you today is talking about probabilities in the markets, right? Probabilities in the markets. And how you're, and there's a, okay, let's actually look at this here right now, okay? There's a if you have a look at the, man, I can't talk right there, right? I'm stuttering all over myself right now. If you have a look at this moving average, I've just squeezed this chart up here. If you have a look at the moving average here, you'll notice one thing. And what is that? You'll notice that the market gets to a certain point before it retraces back to the moving average. It gets to a certain point and retraces back to the moving average, right? We get to a certain point, we get up and we almost retraced it. But as you can see, right, we always eventually get a retracement back to the moving average, don't we? So if we get a big flush down through here, guess what? We're likely to get a retracement back to the moving average. So this is what's known as price and time, right? When the market makes a big move and the moving average, let's just say the moving average was here. And you could see on average, when the market gets to this certain point, from this distance here to this distance here, you'll know that the market has gone too far, it's too overstretched, and we're likely to get some sort of a snapback. Well, as you can see here, as you can see, look what happened. Stretched right up. We got to this point here. Look at it. Came back to the 52 and stretched up. This is such a big thing in my trading, and one of the reasons why I use the 52 moving average. And it really gives me a good, say, couple of months worth of average, the sort of the average on there. Again, it's simple. Now, again, guys, there's a lot of things that I use the moving average for, but if you can use that there, it's just going to give you a much better time. So if you're looking to get into on a buy signal, when will be the best time to get in? When it's right around the near moving average. Makes sense? So if you're, oh man, well, firstly I would say is wait for the market to be in some sort of an upward trend. Make sure we're starting to get higher highs and higher lows. And when we do get a pullback to, say, the 52 moving average, then we're probably likely to then bounce off there. Or either then we're looking to buy when the market gets so far away down here somewhere, so far away from the 52 because we're likely to stretch out. This was one of the things here. Let me actually share this with you here right now. When I when I saw this on the S&P 500, look how far we were overstretched from there to there at the time from the 52 moving average. And so as you can see that was from there to there. So you can see we're quite stretched away. We didn't even do, if I bring this same let's bring this very, very thick up through here, and let me see, it's created another parallel trend line here. As you can see, notice how far we were away from here. Notice that even back here we didn't even get that far from the 52. And so when we got so stretched, and this is what happens with the markets in any markets. If the market gets so if the market stretches so far away from the moving average, we're likely to get some sort of a snapback. If I have a look at, say, even Apple as well too, I knew when looking at Apple, I knew the furthest distance was down the bottom here, was from that there. So if I create another parallel trend line, I can see that wasn't that point through there. Notice how when we actually got down through to here, this is actually one of the things, this is one of the reasons why I actually bought Apple as well too down here, because I knew, look, we were the furthest away at this time. If I draw a straight trend line here, let me actually make that thick. See how that this is probably the furthest away from the 52 it was before we actually likely to get a bit of a snapback. Now, granted, yes, we were in one big massive upward trend as well too. So I saw this trend line coming up and we came down through here and I'm like, this is a great time to buy Apple. I didn't ride this up. I got out around 320 and I made really good money on my options. But I knew we're so far away from the moving average. So when the market gets too far away from its moving average, you have to start questioning. You have to start questioning whether that market has gone too far and we need to get a bit of equilibrium. Again, guys, trading is all about probability. And to give you the best probability, well, guess what? Firstly, as you can see here, market move up, market move down, market move up, market came down. And if you can see that the market's actually bouncing off the 52 and rallying up like that, then that's a perfect time. Well, I'm not going to say just buy on that. Don't just buy on that. But as you can see that if the market is stair-stepping higher and then we get a bounce off the 52, it's generally saying that we're now respecting it. And you can see the market always likes us to come back to the 52. So with Apple right now, we will eventually come back to here. Why? Because we're just getting a bit of a retracement back to the 52. If we have a look at, say, the Nasdaq as well too. Now, if I'm having a look at the Nasdaq right now as I speak using this one technique, and I'm looking back over the last sort of 2 years, what is the furthest it's been away from the 52? I can see that this was the maximum distance from there to there before we actually started getting a retracement. Let me actually see if I can do this here. I'm going to create a parallel trend line. This one here, look at that. See how this one here was the exact same before it actually retraced. Then I'm going to create another parallel trend line, and I can see that this one here got a bit more extended before we actually got a retracement. That was actually pretty much the same there, wasn't it? You can see how we got pretty far away from it before we got a retracement. This one here was the maximum distance. So if I'm looking at the Nasdaq right now and I create a parallel trend line and I do the exact same thing on the Nasdaq, notice how the Nasdaq is the furthest it's been away from the moving average. And we know over time, right? We know over time and over history, look what happens. No matter what happens to the Nasdaq, no matter what happens at any market, we generally do get a retracement. What? Back to the 52. Back to the 52, back to the 52, back to the 52, retracement, back to the 52. So look at it right now. We are the furthest away from the 52 right now than ever before. And so what does that tell you? The market here is the market is now very overstretched on the high side, and buying it here would be a very low probability time. The best time would be when? The best time would be at least wait for some sort of a pullback to the 52. At least you know then when the market is not overstretched, you know the market is coming back to some sort of equilibrium, because that's what the market does. As you can see, any stock, this is one thing I love about using the 52. It's not a magical thing. You could use a 60, you could use a 50, it doesn't matter, all right? But the 52 is an amazing tool. And this is one of the things, guys, that I'm looking at to see whether the market is too stretched on the upside or not. And then I also use the 52 in my trading system, and I also do like to see with my trades when I do get a nice pullback to the 52 and then get a nice bounce. That's when I absolutely love trading those sort of times. Now I need my setup as well too. I need a real good setup. I need a good breakaway bar. So I still need all my trading rules, but by using this one rule, it gives me the probability on my side.